let's talk about payday loans. Not from panic, not from shame, not from survival mode, but from strategy. Because most people react emotionally to payday loans. But the companies operating them, they're moving systematically. Before we begin, this is an educational, and this is only for education. It's education information, okay? Not legal advice. Laws vary by state, and please contact your attorney or an attorney if you need one for legal advice. Now let's talk about the system. Payday lenders operate on volume, speed, and pressure. Collectors are trained. They follow scripts. They work on quotas. It's a numbers model, okay? If you don't understand the structure, it feels personal, but it's structural. And I know that because I worked in that industry as a collector. I saw seniors take out payday loans, and many of them didn't tell their family members that they were taking out those loans. And they were just borrowing to cover utilities or their medicine or even basic living expenses. And repayment was coming from their fixed income, which more than likely was their Social Security. And it's not a discipline issue. Let me say that's a gap awareness and access issue. There are assistance programs available for seniors: utility assistance, prescription programs, food programs, and community-based aid. But if people don't know about them, they won't use them. And a lot of times we are not, with seniors, we need to help them understand that there are programs out there to actually help them. But again, if people are not aware of them, they won't use them. And when someone feels pressure and isolation, especially our seniors don't want to feel like a burden. And I understand that. And they make fast decisions. That's why financial education must include our elderly community. No one should feel forced to borrow against their Social Security. And because of that, they don't know that help exists just for them. Now, let's talk about payday loans and creating a dependency loop. Payday loans are typically marketed to people with limited access to traditional credit, right? And that includes individuals with low or no credit history, households with tight monthly cash flow, people without strong banking relationships, and communities historically underserved by mainstream institutions. These products step in where access is limited, but they do so at a high cost. Payday lending thrives where financial margins are thin. And here's what happens. You borrow to solve a short-term gap. The repayment comes due quickly. Your cash flow hasn't stabilized. And you borrow to cover for the first loan. That's not a character flaw. It's a structural timing problem. Dependency isn't weakness. It's math. It really comes down to math. So how do you interrupt that loop? First, you got to think You have to focus on immediate stabilization. Okay? Immediate stabilization. If you're currently in a payday loan situation, read your contract carefully. Okay? Make sure that, I know that sometimes it says that you can't file or you won't file bankruptcy. Some payday loan lenders say that, but that doesn't, it doesn't go over the federal bankruptcy laws, because federal bankruptcy laws are different. So make sure that you contact your attorney if you're thinking about filing bankruptcy. Document your balance. What is your original balance that you borrowed? And then what was the interest? How much is it? And then communicate early if you miss a payment. If you miss a payment, call them. There are a lot of times, there are ways to make a payment arrangement or talk to them, because sometimes there's deals to be made that, because you don't have the money. So don't ignore the call. Talk to them. Even if you know it's coming up, make a phone call and talk to them, because a lot of times there's something that can be done to help you, so you don't get an NSF fee in your account. And then protect your bank account. That's the one thing from repeated NSF fees. Talk to your bank about the account. It may be some financial institutions will tell you to just close out the account and create another one, so that way you don't have a lot of NSF fees. But again, talk to your bank, and then track every phone call. I tell people all the time that, sometimes collectors, they can call multiple times during the day, and it can turn into harassment if they're calling and it's repeated calls. So you need to track it, you need to document it, because even if they're not leaving a message, it's still them calling constantly, or they're constantly calling your job. So make sure that you record that, and make sure that you report it, that's what's happening. You can report it to the Attorney General, to the FCC, or the Consumer Financial Protection Bureau. Documentation, again, is power. When you keep making those complaints, that's being documented. When you contact their department or their legal team and let them know, hey, they're violating, my rights. And again, look up the your federal laws on consumer protection laws. Look that up and find out what your rights are. Collectors must follow the law. Let me tell you that. We had, I'm not going to say we anymore because I'm not in the industry, but they have to follow the law. Again, look the laws up in your state. There's different laws in the state, but there's also federal laws and FCC laws that they must follow. Okay. They should not disclose your personal financial information. Those details on your voicemail messages, especially at work. They cannot leave detailed information about you, even to family or friends. Okay? You can document excessive calls. You can file complaints if necessary. You can send written communication limiting contact. Those are cease and desist letters, and make sure that you send them by certified mail to say that, hey, I've said that I need you to cease and desist contacting my job, contacting family members trying to reach me. I need you to stop. And you can do that. Okay? But again, you can file those complaints. You're not powerless. Let me say that. You are not powerless. Again, I can't stress enough, there are federal laws that work for you. You just have to be educated about it. And we will talk about that in another video. Third, get a payment strategy. Okay? Do not sacrifice, and I will say it again, do not sacrifice your essentials. That's your rent, your lights, your food for an unsecured payday loan. And what I mean by unsecured, I know there's secured payday loans with vehicles, so that's not unsecured, that is secured. But for unsecured payday loans, do not sacrifice your food. Do not sacrifice your lights. Those are the essentials. You have to have some place to live. You have to have lights and you have to have food. Okay? Then but again, that's that loop, because if you miss out on one, you wind up going to get another. If it'll create an emergency to get another loan, if that makes sense. Okay? That it often creates, if you pay one payday lender your rent money or your food money or your light money, then you got to go get a loan to get something to pay for your essential. Don't do that, okay? Decide what you can realistically afford. And by doing that, when I say that, writing down your spending. A lot of times people don't write down what they spend monthly, how much their monthly bills are, because nobody sat down to write it down. Sometimes, because my background is accounting, of course, I'm always saying put it on the spreadsheet. But if you can't do that, write it down. It's as simple as writing it down. What are your basic essentials? And that's what needs to be paid first. Okay? And control the call when collectors are calling, because we're taught, or they're taught to control the call. Okay? And stay emotionally neutral. Do not get excited, because collectors know when you get excited, they've made you nervous, and they know that you can make irrational decisions. You got to calm down. And even if you have to say, I have to get off the call so I can think about what I can pay, that's okay. It really is. Sometimes you need overnight so you can calm down and think rationally, because sometimes collectors get you, all excited or upset. That's not the time to make a rational decision. Sometimes you got to sleep on it. And if all you can afford is $10, that's all you got. If I don't have it, I don't have it. And you can say that because you understand your finances. But you gotta calm down. I get sometimes collectors, they can be forceful. And collectors, again, are trained to control the tone of the call. If it's not going their way, they might get a little excited, or they may go, hey, you got to pay, and this is how it's going to go, and this is what's going to happen, and blah, blah, blah. But this is about numbers, because collectors have to meet a quota. They have quotas to meet daily and weekly. So if they don't meet their quotas, even at the end of the month, somebody's getting fired. Especially if you're a weak collector and you can't collect money, you're gone. Especially within 2 weeks, you're gone. They're not hanging on to you because you don't know how to make money. So again, you control it, not them. You control it, because it's your money. Okay? You control your numbers. Be cautious about giving unrestricted debit card access to your account. Okay? If you need to use your Cash App or something that you can control without giving your personal credit card information or debit card information. And then make sure you retain proof of every payment that you've made. Now, break the repetition. Okay, that's the best thing I can tell you, is to break that repetition. Breaking the loop requires interruption. breaking that loop, it does. It requires you to interrupt it. Not motivation, it's the interruption of that particular debt. Identify your cash flow. And I talked about that earlier. Identify your cash flow gap. Not just the crisis moment, not just that crisis amount. I need $500 to pay this, or they're going to cut off this, or they're going to do this, do that. Okay? It's about slowing down and breathing. I know things happen. I've been a single mom before, so I totally get it. Things happen. But you got to slow down and you got to breathe. Okay? Because collectors, let me tell you, a lot of times they're in debt too. And sometimes we were the worst ones. But we didn't get excited about certain things because we knew what, okay, well, whatever. I can handle that. We knew that. We would look at the screen. We could tell, okay, watch out, because this person is a collector. Because they understand. They understand the system. Okay? So it is important for you to sit back, calm down, and think, okay, is it just the crisis amount? Or what is it that I need to make up this gap? Okay? Refuse to stack short-term. Again, short-term loans. Refuse to stack them. You don't have to. Because one of the things, again, is about calming down. You get those short-term, high-cost resolutions, it's only going to cause you to have to get into fixer mode again. Well, I got to fix this and I got to fix that. And you're jumping from one thing to the other, okay? Adjust at least one controllable expense immediately. One. Just take one controllable expense. Then build a realistic emergency buffer. I know, sometimes we're thinking, oh, I can't save $1,000. Okay, can you save $1? Can you save $5? Can you save 10? Putting things back, putting something, they don't do pennies anymore, but, I used to save pennies, I save quarters, you save something, because there's emergencies. After a while, that money builds up. So when something does happen, you have an emergency buffer. When it gets to $100, and sometimes we don't even realize that we have it. We just keep putting things over to the side and not realizing that, oh, okay, I actually have it. Okay? Save. I understand that. Again, like I said, I've been a single mom before, so I totally understand. If you save, even if it's just for a week, the buffer isn't about wealth. It's about trying to interrupt this emergency gap. So when the next small emergency happens, you can reach for your buffer instead of that short-term lender, okay? That's how structure begins. That is exactly how the structure begins. Most payday loan decisions, they're reactive. They are reactive. And something's got to break. A bit, there's a bill that may spike. A gap appears, okay? But structure means the minimum essential monthly number that you have to have. Your true cash flow margin. You commit to only what you can sustain. I'm going to say that again. You commit to what you can sustain. You operate from numbers, not fear. Reaction feels urgent. Structure feels calm. This is why education matters. High-cost lending doesn't target weakness. Okay? Again, high-cost lending doesn't target weakness. It fills gaps created by limited access and thin margins, very thin margins. when you understand the structure behind the system, you stop reacting emotionally and start moving strategically. And that's why I wrote the book Inside the Machine, okay? Because when you understand how collectors, lenders, and scoring systems actually operate, you move from survival strategy. The payday loan, I did a payday loan guide, and you'll see that in the comments. I did a payday loan survival guide for you guys, and it's a part of that education because I want to make sure that our community is educated. Not crisis management, not rescue, education. Okay? Now, if you want to understand the system instead of fearing it, instead of fearing the system, download the guide below. Okay? Control is not about avoiding debt. It's not about avoiding debt. It's about understanding the system behind it. Be blessed.